Good afternoon and welcome to what I believe is going to be an interesting and inspiring and informative session. It's a bit late in the day and I'm sure you've been through many meetings, but we're going to try to make it lively. My name is Lisa Jucca. I'm the Asia Finance Editor for Reuters, and I'm going to guide you through a discussion about how digital innovation is affecting and transforming every segment of the economy, even traditional segments that we are quite comfortable with, for instance, retail banking. And I'm joined today in this conversation by Taavet Hinrikus, who's a disruptor. Is also one of the champions of the annual meeting here in Tianjin. Taavet has founded a company called TransferWise 5 years ago. This company is a peer-to-peer money transfer operator. In 5 years, they've gone from 0 to being active in 60 countries around the world already. Taavet is also someone who's been focusing on innovation for a very long time. Before founding TransferWise, he was working at Skype. He was head of strategy there, and actually he was the first employee of Skype. As an Estonian, he's also an advisor to the Prime Minister of Estonia on the country's digital agenda. So, we really have an expert here and someone who's passionate about innovation and changing the world for the better. So, Taavet, maybe to sort of try and help us understand your company and the business model you created. Could you tell us how this idea of creating a TransferWise came about?
First of all, thank you for having me here. It's a great pleasure. So, TransferWise idea was born very simply out of a personal frustration of myself and my co-founder Kristo. So we're both Estonians, and during my Skype journey I moved from Estonia to London. But however, I stayed on the payroll in Estonia. So every month I got my salary paid in Estonia, and every month I had to go to the bank, make a transfer, and the bank said, yes, Mr. Taavet, we're happy to transfer your money, we'll charge you 25 euros for it. It all seemed like, okay, it's a bit expensive, but then I go to London and I go to my bank and I get my bank statement and I look at the statement, and my first surprise is it took 3 or 4 days to get the money. It's kind of like weird. But besides that, I saw that part of the money went missing. That's when I learned that the exchange rates that the bank uses is very different from the exchange rate we can read about on Reuters or find on Google. So all in all, it ends up that you lose between 5 and 10% of the money you're transferring. Okay? And that's when I met Kristo, who became my co-founder. He was sending money from London to Estonia, same frustration, and he realized that we can help each other by doing it in a peer-to-peer fashion. So we did it that way. We helped ourselves. We soon saved thousands of pounds in fees. And then we thought we can do something to help everyone around the world who has the same problem. So that kind of led us to build TransferWise, and we launched beginning of 2011. So essentially what we're doing from a customer point of view, which I think is very important to understand, is we're offering, you could even say it's a simple commodity service, but we're doing it in a way which is an order of magnitude different. It's much faster. So typically we do our transactions in a day, and we're looking forward to doing some instantaneously. In Europe, oftentimes it happens within minutes or hours. We're doing it much cheaper. So we're 7 to 9 times cheaper than the banks. And we've really put a lot of effort into developing our mobile app to make sure that it's as easy to use as it is to use Uber to call a cab or Skype to make a call.
Okay, obviously this sounds like a great idea, but when you first thought about it, and you were kind of looking around maybe for funding to create the company, how easy was it to convince people that, this was going to be a success?
2011 was very different from where we are today. So, first of all, we decided that in order to launch the idea, you don't need that much capital. So the whole, if you think about the way that the digital companies are built, in order to prove out that something works, there's also a term called minimum viable product, which is fashionable. In order to do that, you don't need that much capital. So we did that completely on our own. And then we only went to speak to investors once we had brought the product to market and had first hundreds of people use it and had them use it on a continuous basis. And so we could basically prove that what we built is something which people are happy with. So after that, raising a seed round wasn't too much of a difficult anymore, And we put together a very nice syndicate. Max Levchin, founder of PayPal, invested, and then a couple other people and little funds.
Okay. I mean, can you just help us understand a little bit, what's the secret, of your success? Maybe sort of guide us a little bit more through the business model, because, I mean, it sounds simple as you tell us, but, before we've all been relying on, banks for transfer, or maybe, let's say, brick and mortar money transfer company that, tend to be more expensive. So, what was the, what's changed? I mean, what was the innovative part, let's say, of what you've been, developing?
So it starts with offering something for consumers which is an order of magnitude different, which I already mentioned. But then what's really important is to think about how is our business model different from what the banks are doing. And the fact is that because we're 10 times cheaper than the banks, banks have built a business model and the business model is aligned to their cost structure. So it's very hard for them to be competing on cost with us. So we're doing it for a much lower cost and offering a fundamentally better and faster product. So from that point of view, it's quite different, and it's something which is hard for the current incumbents to do because of the ways they've gotten stuck in an old world model, supporting branches, having too many employees, and using outdated technology. So by being an online operator, by being focused on using technology and modern technology, and by building out our own network to use instead of the SWIFT network, that's kind of what enables us to offer it for 10 times less money, and yet do it in a way that it's financially very sustainable.
Okay. Obviously, I mean, you operate in this sort of money transfer segment, but we have seen the P2P model applied to lending. I mean, probably this is, one of the best known innovative areas. I mean, we've heard about blockchain a lot at the forum. So there's a lot of momentum right now when it comes to, innovation around fintech specifically. So why is there such a momentum, and why are so many disrupting technologies, I mean, in the financial services space emerging right now?
I think it comes down to a bunch of reasons. So we can start with one of the kind of more obvious ones, which is trust. So, we used to trust the banks, and we thought they're looking after us and our money, and that they have our interests in mind. But what we learned with the global financial crisis was that really what the bankers were focused on was very much their own money and their own good versus looking after us. So I think that kind of exposed a little bit of this and made people think twice about this. Next up comes overall consumer expectations. So as consumers, we've gotten used to a much better service across a number of different industries. The way we listen to music is different because we don't buy records or CDs. We pay the same money a month to Spotify. The way we move around is different. We order Uber or whatever the local equivalent is with one button and the car rolls up to you. We can communicate across the world with Skype and other solutions. So our expectations as consumers have become radically different, and we're expecting services to be cheaper, faster, and much more easier to use and transparent. So that's kind of the next one, that consumers are demanding this from banks. Going there and saying, hey, Mr. Bank, why can't you be as easy to use as Skype? And then, then also we can think about regulation. So entrepreneurs, or if you think about a tech company, a stereotypical tech company 10, 20 years ago was 3 engineers in a garage, and they felt they didn't like the idea of having to go into regulated spaces because it kind of felt a bit scary for no particularly good reason. I think entrepreneurs now have understood that regulators are people too. You can go and speak to them, and regulators are becoming much more forward-thinking and seeing that their role is also to think about how do we make sure that service providers who we regulate are innovative, and how do we make sure better solutions come out for customers. And then people, smartphone and the expectations of millennial generation, which are very different. So there's a whole host of reasons why right now is, let's say, is a perfect storm moment when a lot of the financial services sector will be rebuilt over the next 5 or 10 years.
I mean, you're speaking about, the regulation, and obviously financial services is a very heavily regulated segment. It's interesting because, about a year ago, I was at this very same conference talking to some regulators, and the subject of fintech was just kind of starting to appear in conversation, and then 6 months later, the same regulators were now talking about blockchain, and kind of maybe admitting that these are all new developments that they need to sort of learn about and be more knowledgeable. So I'm just wondering, to develop innovation, to foster innovation, what should be the approach of financial regulators towards fintech companies? Because obviously, your company is not a bank, or there could be fintech companies operating in insurance space that are not insurers. It's kind of a different beast in a way, fintech. So what should be the approach of the regulators?
I think regulation is incredibly important, and we are regulated in Europe, in US, Canada, Australia, Japan, etc. So it's an incredibly important area of the business, and when you're dealing with money, I think there are lots of good reasons why it should stay this way. But I think what the regulator should think about is, oftentimes it is that the regulation gets mostly influenced by the incumbents, and their interest is in protecting the status quo. But regulators should see that they need to be driving innovation, and they really need to think about how do the consumers win, and how do we have less barriers because of regulation. And we're starting to see more and more regulators do this. The UK regulator has done an amazing job, and up until Thursday there was a single zone of 500 million customers that you could reach by going through one regulator. But similarly, we're starting to see other regulators in Europe whom I'm sure will pick up the slack and still cover for the remaining Eurozone. Singapore is doing a great job. Similarly, Australia, things are moving fast in Korea. And like what the UK did was they launched something called Project Innovate, which was designed to help young companies get through the hurdle of innovation, basically gives them consulting and support to get through the regulatory process, which I think more than 100 companies have gone through in UK. And next up, what the UK did is now called Project Sandbox, which allows you to start experimenting with certain regulated services, and you can do it just going up to a certain limit. So you can't build a massive company, but you can try out if your product works, if people are willing to buy it, and then you go through the regulatory hurdles. So I think there is a lot of great examples in the world about regulators being much more forward-thinking.
Obviously, we're talking about regulators and how they can be encouraging and forward-thinking. But we've also seen examples in the fintech space, or let's say among innovative financial companies, where things haven't gone that well. In China, where, for instance, P2P lending has boomed, some of the platform founders have run away with money, and I'm sure some of the participants will know what case I'm referring to, and we've had obviously the lending club issue in the United States. So isn't there an issue of ensuring consumer protection also, and how can we do that without obviously stifling innovation?
I think that's a challenge which the regulators have always faced, and also kind of in every other industry, you can always prohibit everything and that way kill all the innovation. I think it's important to think about what level of risk is acceptable, whether it's a sandbox approach or other ways. So I think also, you mentioned the lending club in the US. I don't think any consumer has been hurt there. So kind of important to figure out who do you want to protect, and what is the instrument for doing that. But I believe that's doable, and yet also probably as industries grow, there will always be casualties. and we probably need to accept that's okay as well.
Okay, thank you. So I think, after this initial chat, I'd like to open the floor maybe to a few questions to just make it more interactive. I see a hand raised over there. If you can say your name.
I am Amit Shah from Yes Bank India. Incidentally, we are your India counterparts and partners, so we bank with you and you bank with us, so which is great. I wanted to understand, you're doing this business at 10% of the cost that the banks charge, right? And you're also talking of instantaneous remittance of money to the customer. So are you taking the exchange risk? I was just wondering, how do you manage? Because you're giving, I saw on your website just now that you're quoting the last 9 minutes pound sterling rate, and the way the pound is behaving, somebody is taking the exchange rate in the process, risk in the process.
So we are not acting in a way that we take the principal risk. We either make the exchange in our peer-to-peer network right away, or we work with the financial markets at the time of transaction. So we aim to give customers a quote they see on the website, and this is a model which generally works very well for us. We did, during times that we have now, when the pound is moving 10%, it's more challenging. So that's where we need to think about extra precautions. But in the past 5 years, we've been perfectly happy, and I'm pretty sure we can continue operating this way.
Okay, thank you. Other questions? Another raise?
Also with the bank. How do you handle AML and KYC issues? P2P transfer?
Just a second. Can you just say it again with the mic? It's coming to you now. If you can just repeat your name and the question, please.
Hi, I'm Ahmed. My question is, how do you handle the KYC and anti-money laundering issues in a P2P transfers?
So AML and KYC is something which is taken very seriously in the business, and as we're a regulated company, we're following the same rules and regulations as any other financial company is. So, for example, we're launching in Singapore, and in Singapore we're opening up a kiosk because we have to do physical in-person KYC. We're not happy with that, but we're following the regulation. In Japan, we have to send you a letter at home to verify your address. In UK, we either ask for a copy of a document, or we use various electronic KYC methods. So we do whatever is required by the law in the country, and that's something which I consider to be very, very important.
Another question here, but just wait for the microphone, please. Thank you.
My name is Austin Okere. I'm an entrepreneur in residence at Columbia Business School. I'd like to ask a question regarding who should regulate fintech. Take for instance M-Pesa in Kenya is doing probably 30% of the turnover of the banks, $50 billion, and they are regulated by the Communications Commission, whereas they are doing much bigger volumes than the biggest banks. So in your view, should regulations sit with the Communication Commission for fintech, or with the Reserve or central banks?
It's an interesting question, because I suppose this is a question for lots of countries at the moment, who should regulate the fintech industry.
It's a great question, and I think I probably wouldn't do it justice trying to point out what the solution is. We need to, I think it's something which deserves a more thorough analysis. We can also, you gave a great example of a communication company dealing with money. We can also think there are many examples of completely unregulated ways of doing remittances, whether it's doing airtime top-up across borders, whether it's sending credit which can be picked up in a store as a gift card. So many ways which are completely unregulated. So I think regulators need to think about it and kind of analyze how the world is moving, what is the risk we're protecting against, and how do we still encourage innovation? Because actually, I would put all of this in the category of innovation. So if this had been strictly prohibited, we wouldn't have these innovative solutions today. So it comes down to what we spoke about previously, about how do we make sure that innovation is encouraged, yet the consumers are protected.
If I may just, have a follow-up question. I mean, still on regulation. I mean, since we're in Asia, I mean, we know that the UK. I mean, you said it before. I mean, it was a particularly good environment to set up the company because of the openness and because they've been at the forefront of addressing and regulating fintech. What do you see in Asia? There are competing centers. I mean, we mentioned Hong Kong, Singapore, both trying to be fintech hubs. And I believe that you plan to expand your operations here. So what sort of interesting developments do you see in the region, and which are some good hubs to help fintech companies develop further?
I think overall, we're seeing across the globe that countries are becoming much more competitive, and whether it's fintech or other services, countries are working hard to make sure that the best companies come and establish their hubs in these countries. So same in fintech. And today, I do believe that UK is the best place for fintech companies, and it's a global fintech capital of the world. We'll see what happens over the coming years. In Asia, I think that we can see that Singapore is making great progress. The regulator there is putting in lots of effort to think about fintech. Similarly, in Australia, Hong Kong, less in my experience, but we'll see. And also,
why is less so Hong Kong? I mean, what is Hong Kong lacking, for instance, versus Singapore or Australia that you just mentioned?
So the Singaporean regulator has very clearly put the stake in the ground, hired a chief fintech officer. They're fighting to get companies to set up their Asian headquarters in Singapore. Mm-hmm. I haven't seen that much similar activity in Hong Kong, for example.
Okay, so maybe a lot of talk in Hong Kong. I mean, I'm based in Hong Kong, so I hear a lot about this fintech agenda, but on the ground, not so much action. I wanted to go back to the issue of the UK because obviously, the Brexit vote, I mean, has been the talk of town here at the forum, and you are based in that location. I mean, how is the vote going to affect your business going forward?
So I think overall it makes it much less exciting for Europe and much less exciting for UK. But I think particularly there are two areas. The first one is when it comes to regulation and passporting of regulation. Mm-hmm. So you can get a license from any European regulator, and then you can use it in all other European member states, which means with one regulator you have access to 500 million consumers. That's much better than the US, where you have state-by-state regulation, or any other country. So that was a very great setup, and unfortunately now it won't apply for UK anymore. The second thing which helps fast-growing companies is access to talent. So free movement of labor across Europe was again incredibly helpful. We have a team of 600 people in total. We have 100 people in London, and 50 of them are immigrants in London. We base the company in London. I'm an immigrant myself, so if there wasn't free movement of labor, we wouldn't have done it in London. So that's something which will make life harder for every entrepreneur in London going forward.
So attracting talent, I mean, maybe a challenge, and talent is important to develop ideas and foster the fintech revolution. So again, going back maybe to the audience, are there more questions for Taavet?
I have a follow-up question if you don't mind.
Okay, but has to be brief because we want to sort of give the floor to others too.
Do you compete in some sense with the Western Unions of the world and the money transfer companies in some sense?
So our main competition is banks. So we ask our customers what it's used before using TransferWise, and majority say banks. And then we also hear Western Union, we also hear PayPal mentioned. We started out as moving money between developed countries. So we started out between UK and Estonia, and today our bigger corridors are UK to Germany, UK to France, US to UK, US to Germany. But we've also launched a number of classic remittance routes, so sending money from first world to developing world. We send money to India, to Philippines, and these are also fast growing, and depending on the corridor, we'll have different competition.
Yeah, as we receive almost $60 billion of inward remittances every year, and it's among the highest globally because of the diaspora globally, and it comes from 4 or 5 locations in a sense.
Okay, thank you. Other questions? Over there. If you can say your name, please.
Hi, John Stackhouse with RBC Royal Bank of Canada. Wondering how you will ensure social media platforms don't wipe you out over the long term. Facebook.
That's a good question. I think it really comes down to focus. So I believe that for us doing one thing and really making sure that we are creating the best way to move money across the world by focusing on what I mentioned before, making sure it's really fast, making sure it's really cheap, and making sure the user experience is outstanding. I think us focusing on this, we can probably do a better job than any social media platform. Social media platforms tend to be good to do things which they can directly monetize. So Facebook is great for anything which helps them sell more ads. So I think we have plenty of examples where these companies have tried to enter other product categories and have not been particularly successful. So from that point of view, I'm somewhat feeling good that if we focus on providing the best product, we'll have a good future ahead. And by the way, as Facebook is looking at opening up their platform for bots, that's something we'll definitely be looking into ourselves.
The lady, please.
Hi, my name is Julie Yang from MasterCard. I have a question for you. So I understand this kind of remittance idea is like a money swap kind of idea. So how you manage the any shortfall? Say, for example, Huan Yu next to me, he's a mainland Chinese, I'm Taiwanese. We kind of want to do the remittance with each other, but I will only offer like $300 equivalent of Taiwan dollars, but he wants more, say double. So how you manage it? Is TransferWise, engage with this financial kind of support on this?
So in case we have an imbalance in the flows, we tap into the financial markets to buy the missing liquidity from the market.
Okay. I can take one more question, yes? Has to be brief because we're getting to the end of the session.
So Matthew Bishop with The Economist. A lot of what you're doing, a lot of what the blockchain offers is less expensive intermediation. How much smaller do you think the banking sector, the financial sector, is going to be in terms of revenues, profits, jobs as a result of the 10-year change that you're talking about?
Fantastic question. Yes. I can tell you about my specific sector. So, we're offering a service which is typically 10 times cheaper. So if we think about the revenues that people earn in money transfer, they'll shrink by a factor of 10. So Western Union, I think they make 6 billion in revenue, so they'll shrink to 600 million. HSBC has a line in their annual statements, they make 800 million, they'll shrink to 80. So if we use this as an example, then across the sector we'll see a shrinkage of 10x, which is going to be painful.
So, a real threat for the traditional banking sector coming from fintech. Maybe as a sort of a concluding question, because unfortunately we're coming to the end of this session, I wonder whether, can traditional banks also benefit from fintech? Can they embrace digital innovation and give cheaper, faster, and overall better, customer experience to their clients?
So I think they absolutely can. What they need to do is they have to go through a re-engineering process where they think about how they operate and really set the target that we have to be equally nimble and equally efficient as a typical tech company. I think that's what they need to do. It's very hard to do that if you're a 100-year-old organization with thousands of branches, tens of thousands of employees. It's hard, but if the alternative is not existing, then I'm sure many of them will do this successfully.
Do they have enough time to change?
They probably have enough time. The financial sector is humongous. So if I go back to my Skype background, so Skype 10 years after being born owned 40% of international long-distance calling. So I think similarly, 10 years from now, we'll see 30-40% of finance being owned by tech companies. And that 10 years is a time for the classic banks of today to go through this re-engineering. And I'm confident that many of them will make it, some won't, and then 10 years from now, we'll end up at a new normal where we have a bunch of current banks, we have a bunch of tech companies, and we'll all be competing as equals.
Okay. So, I mean, in 10 years from now, just to summarize, I mean, we're going to have probably tech companies doing maybe 40% or even more of, the financial services that are being offered now. And, if innovation continues, we may experience cheaper, faster, and better products. So thank you very much. I mean, Taavet, we've come to the end of this session, but thank you for, joining us in this conversation, and also thank you to the questions from the audience. Thanks.